Good morning. Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, January 14th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX TV. A programming note, tomorrow we will be featuring an interview with Tom Hutton, recently announced actually yesterday as a new board member for XL Capital. That will be tomorrow. We have one breaking story. It's a casualty story. It's coming out of Busan, South Korea. Apparently at a karaoke bar last night, a fire broke out, killing 8 people. The bar is underground in the southern part of the city. It was put out in less than an hour. It's not known how the 8 people died or whether or not that's the end result of the casualties, but we'll keep an eye on that then. Now to our main news. It's mainly economic news today. The consumer spending dropped about 2.7%, but that's being overshadowed by even bigger news in the banking industry. Deutsche Bank warned of a fourth quarter loss of about $6.3 billion U.S., which is bad news for Allianz. Actually, Allianz is the owner of Dresdner Bank, so we're wondering whether or not any of this is going to trickle over to them. This gets worse because Morgan Stanley is saying that HSBC may have to raise as much as $30 billion in order to survive and cut its dividend. So the losses for Deutsche Bank and HSBC, whose shares fell about 10% and 7% respectively, caused the FTSE to drop about 1.5%. According to some analysts, there are no hiding places anywhere, even for good banks. Other U.S. banks are now going to be very closely watched. Yesterday it was announced that Morgan Stanley and Citigroup are moving toward unveiling a plan for a brokerage joint venture in which Citigroup will receive $2.7 billion and 49% control for swapping its Smith Barney unit over to Morgan Stanley. Nortel Networks also announced this morning that it's filing for Chapter 11 bankruptcy. And there's a very big push going on right now in the financial sector to pressure Citigroup management to divest. Apparently that's trickling over into the stock market. The Dow Jones Industrial Average is down about 266 points. In climate news, the National Weather Service said that the wind chill made it feel like minus 58 degrees in the far northwestern city of Hallock, Minnesota yesterday, as a snowstorm followed by a severe cold wave rolled across the upper Midwest and is aiming dead on at the eastern part of the country. Earlier today, the cold front swept into New York State, sending temperatures which had been in the 30s down to single digits or below zero. It hit 8 below zero in Messina, New York, up on the St. Lawrence River. In Michigan, temperatures this morning ranged from minus 17 to 10 degrees. The ice and snow on the pavements and the streets was blamed for numerous traffic accidents from Minnesota to Indiana. The bitter cold snap was responsible for at least one death yesterday. The leading edge of the cold air is expected to strike the Northeast, Mid-Atlantic, and the southern part of the country today and tomorrow. Up to 4 inches of snow was forecast for Chicago. The Weather Service has warned Ohio residents to expect both snow coming down at more than 1 inch an hour and temperatures to drop to minus 24 degrees. That would be practically warm compared to the mercury in North Dakota, where Grand Forks dropped to a record low of 37 degrees below zero yesterday, beating the old record by 6 degrees. It's not going to be pleasant. An interesting speech was made by Brian Duperreault. This is being reported by the Royal Gazette down in Bermuda. According to the newspaper, Marsh Mac CEO Brian Duperreault believes that the insurance industry is entering an invisible hard market, that he calls it, that will see rates rise, but the value of insured exposures fall. The former CEO of ACE, and now the CEO of Marsh, told an Association of Professional Insurance Women luncheon last week that the hard market would evolve differently from any the industry had seen before. He said the coming year would see premium rates rising, while at the same time seeing declines in underlying exposures in many lines. He He said typically this means a better relationship between pricing and exposure, but, quote, he said, it may not produce a meaningful change in the top line. He went on to say as a result, insurers will not see a dramatic change in their underwriting income, and he said coupling that with continuing declines in investment income, the industry will likely report flat or only modest gains in total income. He then said it will not be obvious that although earnings are little changed, companies are actually performing much better. Other typical aspects of a hardening market, including stock appreciation and greater access to capital, are also unlikely to be evident at first. He said that the environment represents an enormous challenge for the industry, and despite signs of a hardening market, quote, we will have to manage with a soft market mentality because the instant gratification that usually accompanies a hard market won't be there at first. He said to combat the slow improvements, insurers will have to continue to evaluate expenses and employ rigorous underwriting discipline and claims management processes. And this is from the CEO of a brokerage company. Good for you, Brian Dupereau. It's very important to recognize that, in fact, the property value decline is certainly going to affect the amount of revenue that comes in, even though the premiums have risen. One of the first times we've heard this. We've heard before about the decline in asset base of the insurers, but now we're talking about the decline in the value of the actual underlying structure. Other news coming from the insurance world, the Insurance Day is reporting this morning that Franklin Tad Montrose will take over the helm as chairman and CEO of Cologne Re. Montrose is already the CEO and chairman of Cologne's parent, Gen Re. On April 1st, Montrose will replace current Cologne CEO Peter Lutke-Bornfeld. Bornfeld will retire after 16 years at Cologne. The decision by Gen Re to make Montrose the Cologne Re CEO in addition to his Gen Re duties is seen as a further integration of the German company into Warren Buffett's Gen Re organization. Gen Re, of course, acquired Cologne Re in 1994. Eric Dinello, the New York superintendent, is in the news today. He's saying that AIG is on track. He said that Chief Executive Officer Edward Liddy's efforts to fix the insurer are beginning to pay off. AIG's main regulator, of course, is the New York State Insurance Superintendent, Mr. Dinello. Some lawmakers have criticized AIG for hosting a series of costly executive retreats as well as a decision to pay retention bonuses to ward off staff defections. But according to Dinello, quote, Edward Liddy has to make decisions and he should not be second-guessed. He told reporters that after 4 months on the job, Liddy is already engaged in transactions that would help the insurer pay down the taxpayer debt it owes. Liddy, of course, retired from Allstate last spring. He was pressed into service at AIG by U.S. officials back in September as the government put up $85 billion to rescue the firm. Liddy is working for $1 a year. To date, Liddy has reached agreement for the sales of the Canadian life insurance business, the U.S. specialty insurer Hartford Steam Boiler, and he's untangled several partnerships. In some cases, proceeds have not been disclosed, but the total price tag for AIG's major asset sales barely tops only $1 billion. More asset sales are expected, including a large chunk of its life insurance operations, an asset management business, and what has been a highly profitable aircraft leasing business. Dinello said these sales should not be fire sales. We have a little bit more information that's come in on this. Reuters is reporting that AIG has received the first round of bids already for its international lease financing unit. This is the aircraft leasing unit that we just referred to. According to Reuters, the sale process is now in the early due diligence stages. The sale is being handled by the investment bank Moelis & Company. According to Reuters as well, AIG has also retained Union Bank of Switzerland to sell its asset management business, and those books are expected to go out shortly, possibly as early as this week. There's some moving chairs in the NAIC. Oregon Insurance Commissioner Scott Kipper, who resigned that position at the end of October last year, has now been appointed the Insurance Commissioner in Nevada. He will replace Alice Molaski-Arman, who retired back in September. The Nevada appointment of Kipper is the latest move among state insurance departments personnel. In November of 2007, Kipper himself replaced Joel Arrio in Oregon, who in turn had